let's kick it off. Hey, Jamie, what's going on today?
Hey, Scott, thank you very much. Hello, everyone. Welcome to another Office Hours. Today's the 22nd of April. Man, April's flying by. It'll be in the history books pretty soon. But welcome, one and all. Thanks for taking the time to pop in here. Always appreciated. Before we get going here, just a little word about what we're doing here and make the attorneys rest a little easier here. Just want to make sure everyone in attendance knows that all the information that we present in these webinars, whether it's the Office Hours webinar or any one of the other 8 webinars that we're hosting throughout the week, that all the information that we share with you guys is for educational purposes only. If you do need investment advice, what to do, when to buy, when to sell it, all that good stuff, please seek out a registered investment advisor or some other licensed individual like a Series 7 stockbroker that can legally help you out with investment advice. So once again, everything that we share with you guys is for educational purposes only. I think that'll get it done here. And for the new people that might be sitting in on this webinar or might be your first Trade Ideas webinar, just a quick couple of moments here to let you know. Not only do we have the unique award-winning software known as TI Pro, but we fostered quite the community around it. It all kind of starts off with our trading room, which is hosted by Barry Anderson. He opens the room up 30 minutes before the open every day and sits in there pretty much all day and showcases his trading style and the way that he uses the TI software as well. In addition to that, 4, 5, sometimes even 600 people are in that room. The room just got a facelift. We got some new software in there that apparently people are digging a little bit better than what we had going on before. So the bottom line is this. The cost to our trading room is 0. If you've shopped around other trading rooms on the web, you found some quality ones, probably some not so quality oriented ones. Well, this one is about as highly quality oriented as you can get. So with that cost, it makes it a no-brainer to get in there and start using the trading room because not only do we have Barry in there, but we have a lot of experienced traders as well. And I apologize, ladies and gentlemen, I got to put you on hold for 1 second. I'll be back in a sec. I am sorry about that. Pesky call, but it's dealt with now. So in any case, Barry's Trading Room, if you haven't been using that resource, please get on in there. You will like it. Of course, we've got Monday, which is today. You get office hours with myself and typically Steve, but Steve's enjoying some well-deserved time off, so he'll be back in the saddle tomorrow for the Trade of the Week webinar. Speaking of the Trade of the Week, I believe it got off to a pretty good start today. Yeah, entry line right here where it became active and technically is in the money thus far, and I'm sure Steve will break that down in detail tomorrow with the Trade of the Week. Wednesday comes along and we have the Q&A demo session with Dan, our CEO and founder of Trade Ideas, along with our Chief Technical Officer, Mr. Brad Williams. So always interesting to hear from those guys on Wednesday, break it up a little bit. We round out the 5 p.m. Eastern webinars with Andy's Trading Studio, and I ride shotgun with him on Thursdays, starting at 5 p.m. as well. That finishes us off for the 5 p.m.s, and we change it up completely on Friday, and we offer the Trade Ideas Friday support session. Getting more and more popular as the days go by, starting at 11 a.m. Eastern and lasting until 2 p.m. Eastern. We allocate a full 3 hours for that one. And you typically have myself, Steve, Andy, and Sean in there, all putting our heads together, knocking out your questions in real time as you deliver them. So once again, Friday support session, anything TI related, whether it's just basics or help with building a strategy. So come one, come all to the Friday session. In addition to the 5 p.m. webinars, we have TI University. Now, all of these begin at 12 p.m. Eastern. starting on Mondays with 101s, Tuesday 201s, intermediate on Wednesdays, and rounding it out with advanced 401, which I happen to teach on Thursdays. So once again, a great series, even if you've been around for a while and need some of the more advanced, or if you're brand new and need to start from the ground up. We do recommend that you take these in order. Obviously, you'll need what you learn in 101 to make sense of 201 and so forth and so on. So all in all, 9 webinars a week coming at you from TI University, as well as the 5 p.m. Eastern webinars. AI Introduction, 2016, right at the beginning. Actually, technically, it was the very last day of 2015, but we just call it 2016. Since that point in time, we've developed 2 additional AI modules, and just a little chart here to illustrate how our user base has increased since the release of those AI modules. So obviously people are liking the AI. We actually have another one on the drawing board right now. It's in the testing phases, so hopefully sooner than later we're going to have that 4th AI module making an appearance as well. So we're very excited for that. No ETA as of yet, but hopefully in the not too distant future. All right, since my good buddy Steve is gone, let's just take a look here at the major, let's just take a look at the SPY here on the daily, because hey, no big surprise, since we busted above this area up here, and just to kind of squeeze my chart a little bit here, back here were the all-time highs. We've established a little base camp in this upper area here. So what do we have here? We've got 1, 2, 3, 4, 5, 6. Well, actually 1, 2, 3, 4. Yeah, this is the 6th day above this level here. So the question remains, how long are we going to go sideways here before we make a run at this level up here? And quite frankly, it's anybody's guess. Here we are getting into earnings season, and then before you know it, May is going to be over with. We're going to be edging on into the summer months. So could have really good earnings piling in over the next 30 days or so. That could propel it up here. Who knows? We just don't know yet. But no big surprise to see, you guessed it, we had another gap today. Here was the prior close, gap down to right about this the bottom of the candle, I think, right where this guy opened. It was pretty much the bottom. I think there was about a 7 or 8 cents wiggle in there once the market opened. And then you can see just whoosh, right back, close that gap, finished just a smidge higher, as we can see over here, 0.1% higher from prior close. And more importantly, as all of you who are in the chair today know, man, volume was pretty lacking across the board. And we can see over here, SPY coming in at 0.67 of relative volume, which is pretty much the highest level here, 0.65 on the IWM, even more lackluster on the Qs, coming in just a tenth above 0.5%, or excuse me, half of 1, which would be relative volume, and the Dow finishing slightly at 0.47. But needless to say, anemic volume across the board as we continue the sideways march, and we'll see what happens tomorrow. Now, having said that, I was very surprised to see the number of quality setups come through that were produced today, not only from Holly, but from some of my favorite windows, where we'll talk about some of these nice crisp range breaks that had low risk that performed quite well. I'll also show you guys how to get to those windows if you want to give them a try. So let's just do this. Let's just jump right into Holly and talk about extracting a little bit of that risk on, risk off spread that we like to talk about. I've gotten myself into quite the habit as of lately. Now, before I get into this, just want to illustrate over here what I've got going on. We've got Holly Neo at the bottom, all trades blotter for Holly Neo. We've got 2.0 in the middle, and we've got 1.0 at the top. And before I jump into this, ladies and gentlemen, it's been a problem-free day for me on the internet thus far. Knock on wood. Hopefully we won't have any cutouts, but if by chance I go silent, then hopefully it won't take longer than 15 or 30 seconds before I'm back. But hopefully that will not occur. But just in case, wanted to throw that out there. So first and foremost, I was also pretty taken aback by the number of strategies that each AI module came to the party with today. So I just drug my strategy panel over here so everybody could see this was Neo's strategy compilation today. We take a peek at 2.0, nicely stacked as well, and 1.0, nicely stacked as well. So a lot of strategies, a lot more strategies showing up in each module than we've been seeing in the past. I mean, rewind about 7-10 trading days ago, there were actually days where some of these modules only showed up with 2 or 3 strategies. So the more strategies that we see showing up, what does that mean? Well, I can't really put a fine point on it, but just from a general perspective, it kind of makes me believe that, well, based on what we have going on in the SPY and the sideways action here, models catching up a little bit, starting to see more alpha present, or more alpha potential, I should say. So it's going to be interesting to see the strategy count tomorrow and see if this trend continues. But it could be a one-off play, it could not be. But as we trudge along in this range right here, typically once we get this many days behind us, the AI can start making more sense of things. So we'll see what happens tomorrow. But anyway, on to today's action. And let's just start down here at the bottom, and we'll take a look at Neos. So let's see here. This one came along later in the day, but we'll go ahead and talk about it first here. Nothing really to write home about. Here we have the Holly entry signal right here. In this, and we are looking at 15-minute candles here. By the time that Holly used the timed exit here, let's see, looking at the wrong one, profit save. So looks familiar. What do we have here after the entry signal? Well, most of the time we're above it, and then we gravitate back to it. Holly's reduced risk right here. IART, actually it was a profit save. Not the timeliest, all right? But then look what happens after she closes the trade out. Boom, 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 right back to the top here. So the entry line here kind of acting as a little support level. Profit potential here, gravitating back down to the entry line here. So this one, not a lot stood out other than just the kind of the tame action here. Wasn't exactly a nail biter, never even came close to our hard stop here. So, you know, trying to use a break-even stop obviously wouldn't have worked on this one, but just putting our stop, you know, maybe outside of that wick right there would have been a close call, but holding this one a little bit longer would have paid off. And, you know, not the biggest example here, but, you know, 0.27 cents. Significant in the sense that this was 0 and this is 27 cents. And even if you're able to pluck 10, 15 cents out of that trade, nothing wrong with that at all. Now let's take a look at this Zine here. This is a lot more, you know, accustomed to what we're seeing here. Entry signal right here in the money, very similar to what we saw in the prior one. Back down to the entry line again, just barely tickling that entry level right there. And then let's see, Zine, that was a timed exit. So she made it the whole timed way there. The whole timed exit played out. Once again, not the timeliest exit. And if we're watching the markets, and keep in mind, ever since the open today, if we just back up a little bit here, ever since the candle opened and we went about 7 or 8 cents lower, boom, it was just off to the races. So, you know, kind of a 50-50 here on how comfortable you felt holding some of these things based on the fact that the market was trending higher. Zine, what I also liked about this one, and this is present in a lot of Holly plays, as Holly called it right here, and let's buyer stepping in, this looks kind of similar to what a pullback alert would generally generate. We get the pop here, and you know, what are we looking at right here? We're looking at kind of a secondary pattern unfold, other than the statistical probability that brought us this play right here. We get a little penetration above there, and technically that's an opening range break, and we get a little march higher, back down to the line, and just kind of some sideways action into the close. So a lot of these, if you really wanted to get the most bang for your buck, you really had to stick in these things a little bit longer today. But, you know, some days are like that, some days are not. We're going to take a look at some here in just a second that weren't near as finicky. Let's take a look at VOC. All right. This one's got a lot of qualities that I like. Now, the day was a little too young to really go, hey, it's breaking its range here. This is 15 and 30 minutes. You know, if you looked at this in a 5-minute time frame, let's take a look here as well. Okay, so still not really enough time, but look what happened after that. And we can just keep it on 5 minutes for now because the high had been put in. Buyer's clearly present. We come back in here, Holly calls a signal right here, and then, you know, see this a lot in Holly calling a reduced risk. This looks textbook. What happens? We just go sideways, hugging that entry line like a glove. The shaded area right here is coinciding with Holly saying, you know what, I'm reducing my risk because this thing is not going higher. All right, and perfectly fine with that. But look at the, you know, confidence that this one gives us. All right, it's ebbing and flowing right at the entry line. We've already seen that happening a couple of times with different Holly plays today. So it's just par for the course here. All right, nothing to get scared about with this one. Once again, hard stops down here, just hugging the entry line. So if we're in it with Holly right here, not that far of a stretch to go, you know what, I'm sticking in this one. And let me just kind of backtrack here. A habit I've been getting into with Holly here lately is just waiting for the reduced risks and the profit saves to kick in and then examining them, right? And this is a textbook example. You see her close it out, you're like, wow, I've seen this over and over again. We've seen it and talked about it a million times in office hours. So what do we do here? Well, this was the high. What does it do when it gets over here? Notice the volume kicking in as well, right? So, you know, holding this one on a full lot, not exactly a nail biter. Secondary pattern right here, a nice time to add to the position. And you can see, boy, once it cracked that range, that's when the majority of the move happened. So this would have been a great time to add to the position, leverage that position, and get the majority of the move today. A little bit thinner of a stock than what we're used to seeing here. Let's see how much this one does on a, you know, average daily volume 61,000, but it posted up 210,000 shares today and finished at relative volume of 4. So, you know, a lot of stigma out there about low volume stocks. A lot of people like to avoid them, but hey, most people out there aren't slinging 1,000 shares these days. That was for the old days when we had a lot of liquidity. Certainly not the case today. But you know, this one finished 7.5% higher from the entry signal. And if it's slinging 210,000 shares today, should not have been a problem to get off 100, 200, 300, or even more shares in this one because the volume was in it today. So a really nice trade there from VOC from a couple of different standpoints. Not only was it a winner, but it was clearly identifiable where we could have leveraged that position. All right, this next trade, one of my favorites of the day as well, not only because it was a short, but just because of, well, it was pretty beautiful. So here we have Holly calling the short signal right here. We get a little sideways action in the money, back up to the entry line. It's uncanny how many of these were just, this entry line was pegging it, you know, slight excursions away from them, whether they were long or short today, but this one doing the same thing, kind of hovering around the entry line here. Holly made the duration on this one on putting on the brakes, hit the timed exit, right about in this area right here, 16 cents. But once again, sticking to a hard stop on a day like today. And by the way, I kind of got a little thrown off my game here since Steve's not here, but let me just take a minute to show you guys what my compare count readings were today. Because once again, when I saw these readings today, what was my initial thought? Well, there's probably going to be some really good longs and some really good shorts. Now, how long they continue is another story. But with these readings, 49.51, hell, it wouldn't have even mattered if it was 51 red and 49 green. When you see this tight of a ratio, 51.49, well, that's always a really good indicator. Be prepared for shorts, be prepared for longs, but you might want to think about taking profits aggressively unless the chart dictates otherwise. So once again, when I see these things, anything goes, 51.49. It's not until we get above 55% one way or the other that you really think that there might be some follow through. So just kind of wanted to backtrack around to that. All right, so once again on this TPX, Holly closes the trade out. This one, we always talk about using the 50-50 methodology. Now, where you put your stop is another option here. You got two options. You can try to protect that second lot by using a break-even stop, in which case on this one, would it has barely gotten you out. But if we stick to our hard stop, as with most of these today, never even came close. And once again, that is why we come up with hard stops in the first place, right? So if we would have held this one and stuck to our hard stop, we would have enjoyed quite the move here. All right, 76 cents versus 16 cents. There were 60 cents in there up for grabs. So a really beautiful short trade from Holly on the TPX today. All right, let's move on to 2.0 and Devon. I've traded this stock a gazillion times over the past. When it presents itself, I typically like to be in it because, well, you can see here, this one rewarded quite handsomely today. Energy stocks, oil stocks have started to get up and boogie as of late, and this is a perfect example. And Holly grabbed this one coming from the strategy on support. Let's just take a look at what on support came in with odds today. On support, where are you? There we go. Okay, at the top of the list here. Got these sorted by win percentage. So on support came in with 81% odds, kind of underperformed today. One winner out of two, so it underperformed today, but pretty handsome odds coming into the session. And, just you're going to be hard pressed to find a signal like this that tops the quality here. It's not perfect, but hey, it worked nonetheless. And why I say it's not perfect is if it was perfect, it would have came right here as this range break was being crossed, but barely out of that level right there. So we had the high here, we had our low down here, came up here, popped out. Holly flags it just shortly after. So not a bad signal whatsoever. This one just what I like to call the stairway to heaven, just straight up the remainder of the day. Followed her programming, made 66 cents on the timed exit. Actually, I'm sorry guys, I got confused. I was looking at this arrow. That's the exit. I put it on there so everybody could see. Here's the entry signal, all right? Now, I reserve the right to rephrase my comment. This was about as good as you can get, all right? You would have been hard pressed to find, the only way it could have been better is on this next 5-minute candle here, all right? So we stretch this out a little bit, pretty tight stop area, but stopped right here, turned up, and then it was off to the races. The orange arrow, which I mistakenly mistook for the entry arrow here, I was like, this doesn't make a whole lot of sense, right here. So once again, we're in it down here. We get to see it march all the way back up, and then here. I think I had this in 15-minute bars earlier, which is throwing me off here that we're looking at 5s. But now what do we have here? We have the opportunity once again to go, this range break, if it punches through here with some decent volume, I could leverage this position. Turns into a second auxiliary type pattern break here. We got the nice statistical probability from Holly and a great working trade, and then a nice opportunity to add to the position here with relatively low risk if we were using right about here as our stop loss, using this as the entry candle and the prior 15-minute as the low. So once again, great play from Holly on the Devon here. And a big spread. We got 99 cents in here, ladies and gentlemen, between risk off and risk on. And hey, just making the decision here with a break-even stop would have kept you in it, and kind of laughable. It never even made an excursion back below once it broke above that opening range break there. Okay, so Stan, I see your question coming through there. The last indicator. Are you talking about the Devon trade here and where it came from, or which indicator? Go ahead and type it in there. When I see it come back in, I'll come back around here. But while we're talking about indicators here, notice what a lot of these are doing. All right, notice the green line here, the 10-period SMA. We were below it here. Man, once we got above that thing, it hugged it like a glove for the rest of the day. And we're probably going to see that in a few more of these as well. All right, so let's take a look at AU. All right, one of the gold stocks, Anglo Gold, another decent short from Holly today. We get the signal here. We take an excursion above. Let's just back this up to 15 minutes so we can actually see our stop loss here. All right, I guess that's where I have to squish it. All right, once again, as far as beautiful entries, looks exactly the opposite of what we saw in the Devon play. Nice little bottom tick here. Makes it, see, that's where I got confused earlier. It was a pretty pristine bottom tick if you're looking at 15-minute candles versus 5s. AU, just the exact opposite. We got a real nice top tick entry from Holly here on short AU. This candle set a little bit of a gyration here and then a move lower back down to the entry signal before finally capitulating or making this move down here before it capitulated. So a big difference here, even though it wasn't anything to write home about as far as a profit goes of roughly 24 cents, but when you're talking about closing it out for -1 versus 24, you got a nice 23-cent spread in there to try to take advantage of just by saying, you know what, I'm going to give it a little bit more time, and you would have been rewarded on this one as well. Okay, Stan, still don't see you responding on that question, so I'll just I'll respond when I see you clarify what you were talking about there, since I wasn't on the ball immediately. And we could go on with these, but hey, 4 cents here, 9 cents here. Let's just go up here and take a look at the TVTY trade that came from Holly 1.0 today. Looking for a bounce was this one. And once again, not a bad entry, about as good as you could hope for as far as an entry goes. Bottom fishing on this TVTY here. We get the entry signal right here. And then, as everybody likes, immediate gratification. Boom, boom, boom. And then, why did Holly close this one out? Once again, made the timed exit. But what do we do here? We just make the decision based on what we've seen here, which, keep in mind, never really, threw a little wiggle here in the entry candle. But once we got above here, nowhere near the stop. Even using a break-even stop on this one would have kept us in the trade, and we could have profited handsomely, a little bit more handsomely than what Holly got here, 11 cents versus 49 cents. All right, developing tweak all these algos. Yeah, and I'll get to that question here in a minute, Alessandro. I think I understand it. Are you guys planning to allow filters like price and volume over Holly trades on B+? Well, I'm not sure I understand the question, Alessandro, because all of the strategies that Holly brings to each session are already predefined as far as price and volume goes. If the question is, can we add additional filtering to say only show me a Holly signal if volume and price are at these levels? That's not available yet. That is on the wish list, so to speak, but as far as ETA, when that actually might show up in the software, no earthly idea at this point. Now, I'd be remiss if I didn't talk about data a little bit, just because of how beautifully the trade worked, and it was a target hit. So there's really no risk on, risk off to be had here. Actually, Holly timed it pretty well with that target hit, and then it regressed back down 12 cents. But a late day trade coming from Holly with about, I don't know, about 2.5 hours left to go in the market. But boy, just a nice march up, a nice profit target hit, and then backing off. So a really great trade on data, some nice risk on, risk off spread there in the TVTY. And then that's about it for the day. Holly certainly busy today. And what do I mean by that? Well, we got 41 trades. Well, actually 40, let's see, 20, that'd be 21. Yeah, right at 40 something trades from Holly today. So, not a light trading day from Holly. And, if we were to tally up all the trades in the commission, you'd probably have a little bit left over from these gross numbers here. But a lot of these things, at one point in the day today, it was Holly 2.0 that was leading the pack. And we can see from the equity curves here, a nice spike up and a pullback. So, I'm not displaying max profit column, but maybe it would be a good idea to do that real quick here. Let's just see here. Let's see here. And if you don't have this column, sometimes it can show us some pretty interesting stuff here. There we go. Okay. So what does max profit mean? Okay. Max profit is showing us how much the trade was up at the highest point in risk off mode. Okay. So interesting to go back and look at these, whereas Holly plugged out of LOGM for 65 cents at the highest point, it was up 86 cents, 52 cents on HTLD, but at the most, it was up 64 cents, right? So if you don't have a max profit column in there, you might want to add it because, it can be very eye-opening when you're going back and refining your Holly data and going, well, maybe I should start running some averages of max profit to give me a better idea when to get out. Or sometimes that can assist us in going, all right, risk on, should I hold it? All right, maybe I'll get a few more cents based on what average max profit is on a module by module basis as far as each one of the Holly modules goes. But just a little eye-opening, max profit, keep in mind this is a risk off value. Okay, so yeah, I think I understood your question there, Alessandro. In the development pipeline, but not there yet. That is something that a lot of people have requested in the past, so hopefully it'll make an appearance sooner than later. All right, so that's pretty much it for Holly and the risk on spreads. We could take the time to run the numbers, which is add up all the trades here. Let's see, what do we got? Once again here, we got 33, 40, yeah, it would have been, you would have been hard pressed, for example, since the reason I like to address this is because we have made Holly automation available to everybody. Well, just like anything else, there's going to be times to conducive markets to say, you know what, today might be a good day to automate all the Holly modules. All right, it's kind of along the same lines of every trading month. There are typically maybe 2 to 4 days where things really, really rip, and if you're pushing your, pushing your hands and pushing all your chips as much as you could on those days, you really got paid well. But they don't happen that often. So a lot of the times, they're going to be these days where, say, a day where you might want to do that is on a day where we have a very small gap and extremely high compare count readings from whatever compare count window that you like to watch. A lot of you regular attendees know that this is my favorite one because we're looking at the large cap stocks of over 4 billion in market cap that are hitting highs and lows with that accelerated 1 minute volume in the first 15 minutes. So just keep this in mind as you move forward. The smaller the gap, the better. You've heard myself and Steve and Andy talk ad nauseum about how gaps affect not only the AI, but the opportunity that presents itself throughout the day. So just keep in mind as you move forward. When this day might happen, who knows, might be tomorrow, might be a week from now, might be a month from now, but just get into the habit. Number one, find a compare count window that you like, whether it's mine or one that you make. And by the way, whether it's my compare count window or my strategy windows that we're going to talk about here in just a minute, or We're going to go over some more chart patterns here and show you the windows that I extracted these from. But any of these windows that you guys would like to try for yourself, just keep in mind, they're all available through channel 4 here. All of mine, Sean, Andy, and Steve's favorite windows. So this compare count window is present there. And then when we get into these range breaks, these orbs, the turbo up, the turbo down, the turbo up, no resistance, the turbo down, no support, they're all going to be located in channel 4. So let's take a look at some of those range breaks that presented themselves today. And I think today is going to be a really good example of seeing things that are doing high volume. They really stand out on a day like today when the overall markets were anemic at best, right? With the SPY coming in at the biggest relative volume metric of 0.67 here. So first off, we're going to talk about this window right here. This is the turbo up family, no resistance. There were a couple that were really, really good coming out of this window today. I guess we should just take a look at NICE first. And let's just go to 5 minutes on these guys. Okay, so once again, what pattern are we after here? A good old-fashioned opening range breakout, otherwise known as an orb. You can have them to the upside and to the downside, but the beauty is in the simplicity. You don't have to have a whole lot of studies on your chart. Matter of fact, notice what I have here. I've got a couple of moving averages. The green one is the one that I pay the most attention to, and it's typically conducive on the 5 minute. It's really more accurate on the 15 minute, but you know, I have to start off with 5 minute candles early in the day to give me something to work with here. After we get past a couple of hours, I like to go to the 15s to try to help me know when to get out, or if to stay, you know, whether or not to stay in something that's got some momentum. But the bottom line is this, the simplicity of the pattern. 5 minute candles here. So what do we have with NICE? 5, 10, 15, 20, 25, 30. Now, just so happens we've got a 30-minute opening range breakout alert. We've got, you know, a wide variety of times, 15, 30, 60 minutes. The thing is, once you get past 60 minutes, you're on your own. This one just happened to coincide. So we can see here, and you don't have to be a professional, you know, whether you've been in the chair a month or a year or a decade, you know, you're going to be hard pressed to find a more simplistic pattern. So what do we have here? Right here where the blue arrow is where we had NICE come across this alert window saying, hey, I'm hitting a new high. So all we have to do is go, are we getting it pretty close to the range break right here? So anywhere in that candle would have been suitable as far as an entry goes. And then for our risk, which is clearly defined right here, how are we calculating that risk? Well, we're not including the entry candle here. We're going back 15 minutes. And if we can stomach the low of the prior 15 minutes, which in this case, 5, 10, and 15 is right down here, well then we're off to the races. Put that trade on. Once again, kind of similar to what we saw in some of the Holly trades today. We get a little up move, then we get a little ebb and flow right around the entry line before we get a higher move. Good thing is, never really came close to our stop loss. So let's just click this one back to 15 minutes for a second, because one of the added benefits of these guys is they're not going to have any resistance on the daily, right? They're going to be at all-time highs. Now, we're not getting into the trade just because it's at all-time highs, but that's a very nice attribute to have in one of these trades, because this is what gives us the safety and the comfort. Of course, I switched to 15s. It's a lot more defined in the 5s to make the trade in the first place. The fact that it is in blue sky territory is just an added benefit. Now, check out this arrow back from Thursday of last week. NICE presented the same exact intraday setup when it was first starting to percolate here. It was already out of this little range here, but sometimes these things go for days. If you were a swing trader and you liked how much you were up going into Friday, you could have got rewarded handsomely here. It's had a very nice 3-day up, or whether you're just participating and closing out at the end of the day, you had a good one on Thursday from NICE, and you had a good one on today from NICE as well. Nice, okay. Check out the volume on nice. Finished the day at 3.14, right? So 3.14 when the rest of the market is just kind of anemically trading along. This is when volume is very noticeable in some of these orbs. All right, there was one more from the ATH window today, or the no resistance window. NSC, gonna get back over here to the fives. Obviously there's a buyer. You know, we had a little downturn, probably just conducive with the market. We had a run up here, and then we had a nice little 5, 10, 15, 30 minute little sideways action here, clearly definable. We get the signal right here. Just a beautiful entry right here, anywhere in that candle. See, even if you chase this one and got it at the top of that candle right there, that's fine. Sometimes they're conducive like this where you don't have a big run, other times not, but about as good as you could hope for here. 5, 10, 15, this is our 15-minute risk, not including the entry candle. Now, you know, I forgot to put reward up here, but obviously this is the reward area. Notice what's happening with the 10-period moving average here on the 5, and then notice what's happening with it on the 15 as well. So a very nice entry again on NSC, hugging that, you know, acting, you know, the guiding hand here, staying well above it on that 10-period moving average. So, you know, nice tight risk area and a reward area, which is multiples bigger than the risk area. Hey, how was the volume in Norfolk Southern today? Finished the day doing 60% more. Now, you know, on a day where the market is doing average volume, or maybe 1.2 or 1.3, maybe 1.64 wouldn't seem such a big deal, but man, on a day like today where the volume levels are so anemic, you know, not bad volume pushing through NSC today, and you know, a pain-free trade as long as you can make that timely entry there. So those two came from this window here, about the only two quality ones that I was able to identify in real time today, coming through that window. As we get closer to that all-time high, you know, maybe we'll see more of these coming through, but definitely some quality ones coming through that window today. The ones we're about to talk about came from just the regular turbo breaks up, which basically it's the same, except they're not going to be at all-time highs, so we can actually use the daily to figure out how much room might be in there if it goes our way. We were talking about the oil and gas stocks earlier. Got rig, once again, probably traded this stock a million times since I started trading. They have their moments. Okay, so rig, another nice clean range break. All right, and all you have to do with these, ladies and gentlemen, is just be patient and scan through symbol after symbol after symbol, because obviously when we're using new high as the alert, well, hey, you weren't in the chair here. Later on the day, it comes through here. I mean, you clearly can see here, this was the opportunistic time. Not up here, you know, right here. If you see it later on right here, you're like, it's just a little bit past there. Maybe I can still stomach it. 9 times out of 10, you'll panic out of the trade. So just keep in mind, it's all about the timing here. If you can get these fills right here, which once again, this is a highly liquid stock, anywhere in that candle would have been a fair price, right? And once again, our extremely low risk, 5, 10, 15, down here, never even acts like it's going to stop us out. Oh, by the way, rig finished trading relative volume of over 2, almost 21 million shares pumping through rig today. So a really nice move on rig. A couple of these have even set up again. You know, if you look up here, systems identifying the short-term resistance level. Took a little stop there and said, just don't care about that short-term resistance, and marched higher. So see, this one presented an opportunity to leverage the position, depending on how aggressive and how used you've become to identifying these opportunities here. So once again, in rig, very small risk area and a reward area, which is multiples of the risk. What else we got coming here? CGC. All right. Once again, seen as, it looks just like all the others, right? Thing is, what is the caveat? Why is turbo brakes Jamie's window of choice? Because we've got a volume multiplier in here on the 1 minute time frame. As these highs are broken, they have to be doing massive volume on the 1 minute time frame, 3 times higher, or 3 times normal or higher, right? And a lot of these are doing a lot higher, which is why we're also seeing the correlation in where they finish the day as far as relative volume goes. But once again, anywhere in this candle, a great price, and our 15-minute risk is here. Look at the multiple of reward to risk here, all right? Following these patterns, getting used to these patterns, in my opinion, you can't go wrong. And once again, I don't care how long you've been in the chair, brand new, 10 years, it just doesn't matter. These are some of the, let me put it this way. If all of a sudden the Holly went away tomorrow, if everything went away, this is what I would focus on, okay? Because they're here every day. It's just a matter of patience and timing here, all right? So a beautiful trade in risk with, real high reward and low risk coming through. Now, let's take a look at DBX, because this one was all over the place today, a lot of different tickers. And look how beautiful it looked, okay? But guess what? This one stopped us out, right? Beautiful run. Clearly there's a buyer in the house. Dropbox, which, I know I use Dropbox all the time. Probably somebody out, users out there probably use Dropbox all the time. Nice little consolidation here. Looks even more pristine than some of the other ones that we've seen today. But just goes to show you, sometimes you get stopped out by just a hair, only to see it turn and go the direction that you hoped it would. But this happens, all right? Happens all the time. We got an entry signal right here, about as good as you could hope for. 15-minute risk right here, and it just barely gets us out. Happens, all right? Now, you did have the opportunity to try it for a second time, if that's what you wanted to do, which, those of you who've become active with Holly and automation know that you have the ability to play a second entry. So once again, stop out here by a few pennies, but had you made the second entry on this one, you would have gotten to participate in the upside. But just wanted to show you that this is what it looks like on one of these plays when you do get stopped out, right? Once again, our risk was pretty minuscule here on a stock like this, right? What do we have here? If we just kind of eyeball it here, 22.51 and 22.36. I mean, 15, 16 cents as a stop, right? Which is tight by any measure, even if it's a $23 stock. But hey, we're paying attention to the footprints in the sand, which is the chart. Sure, it's easy to go, well, we could have stretched this out a little bit, but hey, if we're sticking to the rules, it's the prior 15 minutes. Now you take your stop out. When it comes back up here, if the volume's still kicking, you're like, hey, I'm gonna try it one more time because I only lost 16 cents on the first shot, right? So just wanted to show you guys an example of one that does get stopped out, because that's the whole gist of these plays, is if you can find them and be disciplined enough to only trade the ones where we've had minimal energy expenditure leading up to the play, well, then those are the ones that you want. Emphasis on minimal energy expenditure, and that's all going to be predicated on that 15-minute risk of the prior 15 minutes if this is small enough for you to feel comfortable. Now, earlier I was talking about how there was going to be some good shorts, some good longs. Now, just due to the nature of the market that we're in, the majority of the opportunity out there was long. But hey, if you've taken the opportunity to download and read the free ebook that myself and Sean and Andy all contributed to, then what I'm about to show you next should look like something right out of the ebook, because it's the same pattern, it's just inverted. Principles applied are the same. Except we're shorting here and hoping for that down move. So SKX, Skechers, which, hey, I've tried Skechers, and they're just not quite as good as Nikes and Adidas. I don't know. They're pretty big as a brand now, but I don't know. The quality's just not there. That's just my humble opinion. In any case, market doesn't care about that. Stock doesn't care about that. What do we have here? We had obviously a seller, pretty prevalent after the open here, and ebbing and flowing, but finally bottoming out and doing the sideways dance here. Why do stocks go sideways? Why do stocks consolidate? Well, buyers and sellers become equal for a period of time. The seller can't just beat it down, right? They got to take a break. They got to try to slice and dice it, have minimal market impact. But the bottom line is explaining the mechanics. Do we really care about that? Nope. All we care about is this pattern that's emerging, right? So we got the sideways action. The bottom's been put in, and then whammy, we get SKX coming across, and we're like, ooh, that's really good timing here. You can short it right here, prior 15 minutes right up here, very small risk area. And what do we have here? Just a slow grind down for the rest of the day. Not even acting, the least bit like it was going to pop us out on very small risk. So a beautiful short from turbo breaks down on the SKX with this opening range break right here. And just keep in mind, these range breaks can happen at any time of the day. Most important question is, do we have enough candles to make sense of the consolidation area, and so we can assess our risk. So a great short play coming out of turbo breaks down, which this window right here, HPT, more of the same. Now, you always hear me talk about energy expenditure, okay? Now, this one, let's just go back to SKX, okay? Here we are just kind of dancing right here, very little movement. It didn't have to move very far to get down to this entry signal here. HPT, a little bit more energy expenditure as it meanders its way down, to these prior wicks here, all right? But top of the 15-minute prior area, right up here. So that's 26.24, 26.11 here. Looks big right here, but that's like a 13-cent risk, right? That's why I love these plays. Very small risk area, very juicy reward area that's multiples of risk, okay? So what do we got here? We got a nice clean break. All we have to do is sit and wait. And once again, clearly a seller in HPT today, and all we had to do was stay in it. What's the 10 period acting as on the short plays here? Well, on the long plays, staying nice and above that 10 period SMA, but when we have a stock in play and in momentum to the downside, this guy acts as the guiding hand or the whack-a-mole. Every time it tries to pop its head up here, wham, 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 hitting it back down. Pretty effective. We got a little bleedy here, but even if you stayed in this one for the remainder of the day, the biggest up move was after the close, even on a 5-minute candle above that 10 period SMA. So a beautiful short in HPT. And we'll round it on out here with this one, MIDD. Looks very similar. This one came closer than any of them to getting stopped out without getting stopped out. But once again, pretty tiny risk area. What do we got up here? We got 133.82, 133.56. Let's just call that 50 cents on a $133 stock. That's not bad at all. All right. If you try to use a 50-cent stock on most $100 stocks, good luck. You'll be out of it. But this one holds up because, you guessed it, there was really a seller in it today. All right. And when there's really a seller in it, they got to get some stock out, and that works in our favor. Probably the weakest as far as relative volume goes today, only coming in at 1.47. But once again, when the market coming in slightly better than half, this means a lot more than it does on a day where we're doing normal volume on the greater indices. So once again, no stop out here and a nice big reward area here again. So once again, simplicity coupled with volume can yield some really great trades. And you don't have to be a rocket scientist, guys. You just have to identify the consolidation area. Can I accept and tolerate the prior 15-minute high or low as my risk? And then you put the trade on. Short, long, same pattern, just inverted, right? And these plays are out there each and every day. You just have to get proficient at filtering through and picking the right ones, and we all know what the good ones look like, right? So that's about all the crisp range brakes that I queued up for you guys today. And once again, to get turbo brakes up or down, or the ones with no resistance or no support, just cruise over to channel 4 and you can archive all of those windows into your cloud. All right, just checking out the itinerary here to see if I missed anything, and I thought I might run a little short on content today due to Steve not being here, but it looks like we did a pretty good job with about 2 minutes to spare here today. Let me just check out the questions panel, see if I missed anything. Yeah, Stan, so once again, just cruise on over to channel 4 right here. You'll see turbo, all the turbo brakes, and no resistance, no support here. The original versions are right here. And then if you'd like to try out the big cap movers on the compare count windows, you got the 4 billion and higher right here. And then if you want to go into S&P land, which is the 5.4 billion market cap, you could try this one out. But these two pretty much going to have similar readings after the first 15 minutes, maybe slightly different. All right, ladies and gentlemen, that's about all I got today. I want to thank you guys for popping in here. And Scott, if you're ready to tell everybody how they can save a little bit of dough on an upgrade or a new subscription, we're all ears.
That sounds good. There's a couple items on the way out. We have an ebook that Jamie contributed a chapter or two to. It's 5 ways to win in a post-BTFD market. So just go to trade-ideas.com/ebook and put in your email address to get it download link delivered to your email. We've also got podcasts that come out weekly. We didn't have one last week because of the holiday, but should have one up this Friday. And search for Trade Ideas Podcast wherever you listen to podcasts, and you will find it. Add us as a subscription and enjoy. There's a code, good this month, good for the remainder of April. Auto Holly, all caps, just like it is on your screen, saves you 15% off of the first month or year of any subscription, also off of Brokerage Plus. And standard subscribers can use it to upgrade and save the same amount. Any questions, send us an email, info@trade-ideas.com. You can follow Jamie on Twitter at QuantBot. And as usual, co-pilot Steve is Today Trader on Twitter. You can find our page on Facebook at facebook.com/TradeIdeasPro and like the page so you can share what we post with your friends. Thanks, Jamie. Thanks, everyone.
Thank you, Scott. Thanks, everyone.